In this video, traders, we are going to look at what to do when the market acts unusually. Stay tuned. Hey guys, warm welcome to you. Alright, so what do I mean by when the market acts unusually? So what I tend to mean by this is that you have probably got a feel for the market that you're trading, whether you're trading a currency pair, an indice, whether you're trading a particular stock that you like to trade. You kind of know how it trades. It doesn't necessarily mean you're going to catch every move and you're a genius going to extract money out from every day, but you get a little feel for it. Like, well, I think we'll test that level. It might have broke through here, or it's holding here, and you kind of then pick the best places to execute your trade. And sometimes the market just acts really strangely. You know, some of the correlations that you're looking at, some of the indicators, some of the tools you kind of use to guide you as a roadmap just aren't really working. And so you kind of got this situation where, you know, what do you do in that situation? Do you press on regardless and go, well, risk reward will sort itself out? Or do you do something else? So an example I had the other day actually, and you often see this in themes, especially for the index futures, is that, or if you're trading indices via Spreadbit or CFD, you know, days like Fed Day, days when you've got witching, days when you've got some sort of data, they do act a little bit unusually. So sometimes I know many traders don't trade the key data days or days when you've got the options expiry. So, and it might be the same for the kind of market you're trading. Maybe if you're trading after earnings, a week after earnings for a particular stock. If you're swing trading, maybe the earnings season is a bad season for you, or not the earnings season. You get the idea. But for me, essentially, when I'm executing day trades on the indices, you know, I'm looking at the correlation of kind of volume, SPY, if I'm trading on the Dow, the tick index, and time of day. But the point is that, you know, what do you do when it's just not acting right? And I remember this the other day. It was just, you know, it was out of sync. The Dow was out of sync with the S&P 500, the SPY. The ticks were strong, but the market was pushing to lows. The volume wasn't, you know, spiking. The market was kind of spiking up and doing nothing. And it was really unusual. And you kind of think, well, what should I do in this situation? Should I still trade my setup and strategy, which might be kind of buying this low level? Let's say that you've got a support level kind of running through here or something. And you're like, well, do I just carry on and buy it and let the risk reward sort itself out? In other words, it doesn't matter if it's trading unusually. My risk reward is X. I'm looking for up here. I'm buying here. My stop is this. Should I just take it anyway? Which is one school of thought. The other school of thought is to just kind of get on with it, deal with it, accept that it's different and trade it anyway. But another school of thought, which is kind of the thing that I like to do, is I like to say, okay, well, if things aren't operating the way that I feel they should be, if I don't have a good read on it, don't give up on it completely. Don't go, well, you know what, I don't touch it, because it might just be a short phase, especially intraday, or if you're swing trading, maybe a couple of weeks a bit odd, but give it a bit of time. So one thing you can do, a little trick you can do, is you can say to yourself, right, well, let's just see what happens when it's in fresh territory. Yes, it may be for the rest of the day, but you can do stuff like this and you can say, right, well, I'm going to bracket this, I'm going to walk away, and I'm going to set an alert there, and I'm going to set an alert there. Now, different from normal alerts where you might want to get involved with the trade in the market there, this is an alert to come back to the screen and actually retune in. Because you can admit and say to yourself, you know what, I don't really have a feel for what's happening in here. It's in the relationships that I normally look at. And let's say if you're trading a currency pair, maybe you're looking at the indices to trade the currencies. Maybe you're looking at price of gold to trade a particular currency, or price of oil, or you're looking at bonds, or whatever it may be, and it's not quite as you feel it, then just ignore that section, if you like. So it's sitting there and say, listen, they're not working, that correlation is not really working, or the indicators I'm looking at, let's say using a specific indicator like a Bollinger Band or an RSI, isn't really giving me the readings that I'm used to. I'm a bit unsure. Then rather than just write off the whole day or the whole month or whatever it is on that stock or index, whatever it may be, you could say, hey, there's my alerts. If we get to a new low or a new high out of that, then I'll come back in and I'll assess and I'll see if there's a further setup to be had from it. If we don't and we chop around in this, then let it get on with it. Because the danger you've got is that I feel that if you ignore stuff that's working for you in your process and you trade it anyway, you're almost reinforcing the behavior of, okay, well, I don't need to listen to my rules that I've already got. I don't need to listen to the approach I've already got. I can just trade anyway, and risk reward trumps all. And yes, risk reward is so important and crucial, but You know, I think that if you just say, okay, I've got my sweet spot, I know that my process works, why don't I just concentrate and put my energy in and risk my capital when I know, at least I know my process is working. Then I've got my processes working and I've got the risk reward. I can combine them together to make much more of a powerful setup and a powerful approach. So one thing to do, guys, for me, is when the market's acting unusually and you don't feel like it's up, it's down, I don't feel I've got a good read on it, put your levels in, above a key level, below a key level, set alerts on, have them push to your phone, whatever you need to do, and then walk away, because that gives you some downtime, gives you some relaxation time, allows you to refresh. And then it comes back, you come back and the market's kind of up here and doing this, you can reset and go, right, well, we've done this, forget that. Now let's see if there's another trade, there's another opportunity. Is there something that fits in my roadmap with my plan? Yes, there is. All I can execute, does it line up with all the indicators and bits I look at? Yes, it does. Great, pull the trigger. No, it doesn't. It's still acting a little bit flaky, a little bit odd. Then you can write off the day, come back the next day or whatever time frame you're trading at. So something to think about, guys, not getting caught up. Capital preservation is the big one. Confidence preservation is the big one as well. And sometimes you get caught up in stuff that's not quite right. You end up giving it back. You look back on the day and you think, why did I even get involved in it? It wasn't acting as I wanted. I didn't really have a good read on it. I was just punting away for the sake of it. And that's quite damaging sometimes. All right, guys, take care. Whatever you're doing, keep the risk managed in your trading. Appreciate your support, subscriptions, shares, comments, likes, and all that stuff. Bye-bye.